Yeah, we started very small. It was a $10 million friends and family along with the capital from my old firm. And today have grown to 650 million in assets, predominantly focused on crypto. And then, like you said, balance sheet actually doesn't still exist in prime brokerage form with crypto. It just doesn't. And what will change that is the top 5 banks in the US decide to offer balance sheet. So if balance sheet is provided in a regulatory compliant way for the largest players in the world to trade crypto native, then it'll get interesting.
Even if like the existing TradFi like venues take that decision tomorrow, I don't think it's that easy to just decide like,
no,
we are going to be operating similar into that model.
No,
right?
They can't. It would take years. Like you said, perps and futures and options and other derivatives, a lot of flow going through those markets. Those are signs and signals of a mature market.
Welcome to another episode of Derivatives Decoded. Today, I'm very excited to have a conversation with Adam from Hunting Hill, the founder and CIO. But I think there's a lot more for him to tell us about. So Adam, thank you for joining us today.
Yeah, no, thank you for having me on. I really appreciate it. I've been enjoying the podcast, listening in, so happy to be here.
I'm glad that you're here. So Adam and I, we were just actually talking about this right before recording, right? You have a very unusual background, right? Like just, I don't want to spoil this for our viewers. Walk me through that background.
Yeah, so I guess in a style of uniqueness, I grew up on a farm in Ohio and was living there with family until I was about 13. And so the last 22 years of my life have been in New York City, very different than the upbringing in the Midwest. And yeah, early on when I was younger, I was playful kid. I played a lot of sports and got into soccer pretty seriously by the time I was in high school. And was recruited to play, made the national team when I was 17 years old.
Did you ever get to play with the national team, like at a global level?
So I actually was I was a player that made the group stage and was never called to the full team. And I have a funny story about a guy who I used to play with that grew up in Michigan, and he was on the team, and actually we played with each other, playing center back, and he was right center back and I was left center back. And, we both sort of made that national pool and stayed in touch for a little bit, but then got out of touch. And 20 years later, I re-met him, so to speak, at my kid's school. And I didn't know it was him. And so, we kind of played soccer together with our kids. And I was like, man, this guy's really good. I was like, hey, where did you grow up? He's like, Michigan. I was like, do you remember the guy who played next to you in the national team or regional team at the time? And he's like, yeah, this guy Adam. I was like, yeah, that's me. So just kind of full circle, growing up in the Midwest, playing competitively soccer, and now, obviously in New York and enjoying asset management life here for many years.
So from farm to soccer, like national teams, right, to all that stuff, and then capital markets and crypto.
Yeah.
Explain.
Yeah, totally get that. I mean, when I was younger, obviously very competitive playing sports, and I was drafted to play professionally, which I did for a couple seasons, and I enjoyed it. It was really fun at times to be playing, and my early 20s traveling around the US. And I also realized that it was just not a career for me. I love playing, and I also wanted to build a career. And so I was looking for something competitive to do with my time. I was studying behavioral finance way back in the day before it was called that, studying econ and psychology. And so, I got into an asset management position, trading derivatives. It was a guy who started a hedge fund that looked into options trading and vol. So
our favorite here at Kemet.
Yeah, exactly. And what's crazy is I actually worked unpaid for a summer just to get my foot in the door.
What's the timeline around this?
This is 2003.
Okay.
Yeah. So after I graduated, I played for a season or two, and then 2 seasons. Then, it was actually 2004, I guess, this summer. And I was playing semi-pro in Brooklyn for the Brooklyn Knights, this PDL team, and then working. And so I ultimately got a job as a clerk at a prop desk called First New York, and that place was great. It was an entrepreneurial environment, super flat. So it was, very call it, it's capitalistic. So if people could generate capital,
eat what you kill, basically.
Yeah, eat what you kill, generate return. you get more capital to trade. And was sitting on a arbitrage desk that looked at depository receipt arbitrage, so between U.S. listed New York Stock Exchange companies and their common stocks overseas. And so there was a price difference that we would run a model on and look for any kind of discrepancies in price, and looking at the complexity premiums around corporate actions, et cetera, to try to capture spread. And I quickly got into ETFs, which was a new product back then. So in 2006, there wasn't really that much volumes going through ETFs. And so I started to look at them. It was actually 2005 and 2006. And my boss at the time, who was a partner, was like, yeah, you can go ahead and trade those. No one's going to look at ETFs. It's a fad. It's going to die out soon. Like, go for it. And that
was a fall back then.
Yeah,
wow.
Back then. Yeah, like 2 years later in 2007, I had the largest portfolio in the firm with the chairman. And that was because ETFs had just exploded.
Blew up, yeah.
And there were vol trades in there. There's commodity products that started to get launched. There was high yield bond products that were getting launched, triple levered products getting launched. And it, as I said, it sounds a lot like what's happening in crypto right now. And so, I got involved in the ETF space early. And I had some really good success around dislocations and kind of complexity premium that we're looking at in 2007 and 2008. And then decided to spin out and launch my own fund in 2010.
Okay.
And Hunting Hill launched in 2012 just because we were looking for more balance sheet. So the firm I had been a partner with supported that effort, and which I fully appreciate. They gave us a managed account and enough capital to get started.
So what was the thesis in 2010 to start your own fund? What was the opportunity that you're going after?
So we had a pretty large portfolio in indexes and ETFs and closed-end funds. We were trading a little bit of vol and corporate actions as well. And so the mandate spinning out was really to just get more, provide the strategy with more balance sheet.
Yeah.
So the firm itself had only allowed for up to a certain amount of capital that they would provide for a trader, and they had precedent of other traders raising capital outside to get bigger. And so that was the step process, just to provide more balance sheet. And we'd find days where we'd have $1 billion trade potentially, and it just was too concentrated for the firm, which I totally get. And so we were able to then have a fund and manage that capital for other LPs, other investors outside of the firm.
Got it. So that's the story of Hunting Hill, 2010, 2012, right?
That's the first fund launched. The first vehicle launched in 2012.
2012. All right. And that's just you at the time? Like you're kicking off?
Yeah, it was myself. It was a small team. There was 5 of us. And I was the CIO, managed really just a trader and a PM and some middle back office support. And we started very small. It was a $10 million friends and family along with the capital from my old firm. And today we've grown to 650 million in assets, and predominantly focused on crypto, which is
incredible.
Wild.
So let's fast forward to today then. Tell me, describe Hunting Hill as an operation today.
So the firm, like I said, 650 in AUM and growing this year. We have a variety of different strategies. So we started in the market neutral space, which we would consider pure alpha to the best we can, which we still run. We have really 2 strategies in the alpha space. One that is market neutral in crypto, which is solely dedicated to that space. And then one that we would consider that's still in TradFi, meaning it doesn't actually trade the coin, albeit about 80 to 85% of the risk is in crypto derivatives now, given sort of the worlds have collided between crypto and TradFi with crypto treasury companies, ETFs, obviously derivatives, options, all sitting in those 2 strategies. And then we have what we consider an active index strategy, a long only in crypto, the top 25 by market cap, which has done obviously extremely well over the last few years. We launched that strategy in, I believe technically it's February of 23. So a good time to get in from a price perspective. And that strategy is looking to outperform an index with some call it alpha generating strategies and staking. And then we have a credit strategy, which we just got a mandate for up to $1 billion in balance sheet to provide loans in BTC and ETH. So an over-collateralized BTC and ETH lending, which has really grown in popularity with a lot of players looking for ways to access fiat or stablecoin with their holdings that have obviously gone up a significant amount. And then a strategic venture. So we do some venture style investing with companies that we think we can add support and call it expertise, not just a check. So we work very closely with the companies that we partner with. The largest name that we have done a deal with is a company called Versify. Yeah, the firm has grown a significant amount organically into the crypto space, where again we started in TradFi, and I think it's something like 90% of our risk now is in crypto. So it's a crypto-centric firm, and yeah, we're just excited about
How many
all
are
that's
you guys
happening.
today? What's the account?
We're 8, so we keep it lean. Yeah, we're a small group, and it's a senior group, guys that I've known for many years. Our deputy CIO, a guy named Francis Barbieri, who I've been working with. We've been working together for 8 years now, so we've seen a lot of ups and downs in the crypto space, and just as a business owner, generally speaking. So this is our called third cycle, working through it, and we manage risk in a way that is coming from a TradFi lens, for lack of a better term. We're looking at not just price risk or P&L risk, so to speak, but also compliance, regulatory, and what we consider, some of the unknowns out there in the space. And so, yeah, we've been able to navigate pretty well through these cycles. And there's not, I don't think there's that many managers out there that are SEC registered, based in New York, and trade crypto for as long as we have. So, we feel fortunate and grateful to still be involved in the markets in the space.
You've been around for quite some time, and I think that can offer obviously like insights into market structure that others might not be able to kind of capture or catch on, right? So
yeah,
how have you seen sort of this market evolve since 2012 almost, right? I'm guessing you guys got into crypto pretty early also as well, right?
Yeah,
And I guess given the fact that you're in this unique sort of position of being an asset manager, but also specifically now focused on derivatives, and I've seen the hockey stick growth for perpetuals, and now options are going to be experiencing that explosion. And then the regulatory side of things, right, which is pretty much affecting you guys heavily, right, for the entire course of the operation. Where do you see market structure evolving from where we are today, and how have things changed from when you started to right this moment?
Yeah, it's a great question. Yeah, so our first look at crypto was in 2016. Actually, we were looking at closed-end fund strategies for many years, and one of the Bitcoin closed-end funds showed up on our screen. It was GBTC, and there was actually a guy named Pat McAvoy, who's at Canaccord, who showed it to me. I actually looked at the email recently, and it just said, "Hey, have you looked at GBTC? I don't know what's going on there, but you're smart enough. You'll figure it out." I was like, "Okay, Pat, you'll get the order if we figure something out." And so that was the first look at the space, so to speak. So I had done one look at Bitcoin in 2011 with my cousin, where he asked me to buy pizza with Bitcoin on a thumb drive. That was the first time that I was interacting in the space, just to kind of learn about what was going on. And from our institutional knowledge has grown significantly since GBTC and all the products that have come after that. From a market structure perspective, back then it was just so immature. There was no borrow market. There was no way to get any leverage outside of trading perps offshore, which had its own hair on them. And yeah, today there's just so much more infrastructure built in the native space, and there's a lot more crossover between crypto and TradFi. Obviously, we're seeing crypto treasury companies, ETFs, all of these new products, depository receipts that will have what I would consider TradFi pipes in them. So they're settling in DTC, regular way settlement, and have a underlier as Bitcoin, Ethereum, et cetera, down the line. And so it's just different wrappers that I think TradFi markets are familiar with and comfortable with, with the exposure to crypto. And so, yeah, these two worlds have been really colliding pretty significantly in the last year, mostly due to the regulatory clarity. So, yeah, beyond the ETFs getting approved last year by the SEC, which came with a fight, it is, the reins have been loosened a little bit to provide more clarity, so to speak, on the regulatory environment, and provide these different institutions to just give solutions to the market that they're looking for.
So, I mean, are you much more excited than you used to be about crypto now, given the ease with all the administration sort of shifts? Or, I mean, do you feel like it's just an inevitability of where things are? You guys have been believers since day one, and that's kind of it will continue on that path. I guess I'm like,
Yeah.
you've seen the shifts in sentiment around like digital assets altogether.
Sure.
Right? From
Yeah.
like,
Yeah,
right?
there's some pretty severe. Yeah, look, I think that it's crypto itself and blockchain is just a financial innovation that is unique to my generation. And yeah, I believe that there's more use cases out there, not just in the financial space, but also starting to show up in sort of day-to-day life. And that is what is exciting for me. So for the last 15 years, we haven't really seen that many use cases that are broadly held globally in the space, and that's starting to change. That's the thing that really, at least I've seen it as a difference. And a lot of that is regulatory clarity, and some of that is just time and capital going into the space that otherwise wouldn't be there. And yeah, there has been cycles. There have been some pretty extreme up and downs. And you know, I was asked the other day, I think there's going to be another 80% correction in Bitcoin? And I'm not so sure there will be. I mean, I think that there's a possibility, especially if leverage comes into the system, that is just not responsible.
Yeah.
Is the cleanest way I can say
just
it.
Put it that way.
Then yes, there's a chance it will have that sort of correction. But there's the law of large numbers, and plus the institutions that are coming in that are generally responsible when they are providing leverage. It's hard for me to see that. Certainly never going to say never, especially in crypto on something like that. But it does feel mature. The market does have this infrastructure build behind it that, in the market structure world with, like you said, perps and futures and options and other derivatives, a lot of flow going through those markets. Those are signs and signals of a mature market.
Like, yeah, of course, instruments, asset classes, absolutely. But at the end of the day, right, like maturity is kind of like a much broader term for the entire like market, right? So, and I guess maybe if you could help me tap in a little bit more into your like journey and your expertise, like what's the delta in terms of maturity compared to the TradFi world that you come in from, right?
Yeah.
To where we are today in digital assets, right? And, you know, obviously when we started Kemet, right, the whole point behind Kemet was to start closing in that gap, right?
Yeah.
So like, you know, like we look at this market and they're like, well, across the whole stack from balance sheets, like credit, PBs, chain, like everything is just it's like the Wild Wild West, and like nothing actually seems to be there, working perfectly as it should be.
Yeah.
Given the the volumes and the number of players that keeps increasing every single day.
Yeah.
How are you seeing the market today? Is it a lot more mature than it used to be? And how far are we from being, sort of parity with where TradFi is today?
Yeah. I mean, so there's still differences from an infrastructure perspective and market structure between TradFi and crypto. I think that at least from our perspective, being registered with the SEC, we abide by the custody rule in a pretty conservative way. And we ensure that all of our assets are at qualified custodians. And that hasn't really fully hit the market in the US yet. So like the big players like Bank of New York and State Street only just really, I mean, State Street's frankly not nearly as caught up as Bank of New York in the space. Bank of New York has build outs that they can custody Bitcoin. They are starting to custody Ethereum, and they do that for some of the ETFs. This is all obviously public. That's pretty limiting, I guess, in what they offer, and it's there. But until it is sort of broadly used beyond Bitcoin and Ethereum, and from my perspective is more of a, we have one strategy that's more of a trading strategy. It's challenging to put our assets at a qualified custodian in and out and trade them every day. And so there's
a lot of friction there.
Yeah, there's friction there in how those builds are coming, and that will mature, that will change over time. But relative to TradFi, where it is sitting at a qualified custodian, settles DTC, we don't even think about it really.
Yeah,
I mean, my ops team might think differently, but yeah, it's done in a sort of process way, and those are being built out now. So I think that is one sort of key element, at least in the US, is custody and settlement. And then, like you said, balance sheet actually doesn't still exist in prime brokerage form with crypto. It just doesn't.
The true cross margining is just still not a thing.
It's not really there in any kind of size. I mean, there's definitely offerings out there that do it in small ways. And what will change that is the top 5 banks in the US decide to offer balance sheet.
Open the balance sheet.
And if that happens, that changes it. It certainly matures it and looks closer to what we would see in TradFi for the trading institutions, investing institutions, like the hedge funds of the world.
But how do you see competition as an asset manager that started very early
Yeah.
to offer asset management services for the digital asset space, right?
Yeah.
How do you see competition coming in, like now with obviously like all these like administrative shifts? So
Yeah.
the stance on crypto, the SEC is much more friendly than they used to be now,
Sure.
right? Like all these entities. You expect some of the existing asset managers, obviously, that weren't touching that space,
Yeah.
are now coming in. How do you view that?
Yeah, it's a great question.
Yeah.
And so we have had a lot of conversations with asset managers that are either in the space and want to get really sort of called larger, spend a lot of more time, energy, and investment to offer product to investors. And there are some that are hesitant and have never actually offered any asset management services in crypto and are just trying to figure out how to do it. And so, yeah, there's a surprising amount of reverse solicitation that we get from different asset managers in the space and actually crypto natives that are looking to grow or build asset management and, want to learn
So are we
if there's ways to partner with us. I think
are we talking consolidation, or are we talking just to offer asset management as a service?
It is, I think, for the conversations we're having, of both.
Yeah.
And I think there's going to be consolidation, generally speaking.
Across
And
the
so
board.
obviously we have those conversations. We're in the space and we're open to having those and enjoy them. There's also just using a digital asset treasury as an example. Most of those public companies need asset management in order to run a treasury.
Yeah. It's impossible to do that otherwise.
And some of them don't have it.
Yeah.
And so they'll outsource it, or, we've had conversations with many treasury companies to provide that service. And so, yeah, to your question, it's both. It is that sort of strategic consolidation conversation. And there's also, please help. We want this service and need it in an institutional way. And that's honestly only really been the last 6 months as that really picked up.
So you feel that's have definitely spiked up the demand on crypto native asset managers. Is that correct?
That has definitely happened for sure.
Especially SEC registered ones.
That are
the ones that
based
are actually regulated.
that have some experience doing it.
Yeah.
And there's only a handful out there that.
But that's great news for you guys. I guess these are good problems to have, which is growing pains. What are those growing pains? Like if tomorrow you want to scale up your 650 to 10x, go to 6.5.
Yeah.
Walk me through what will be required, or do you feel like you guys are operationally in a position that you could just take on in the next 100 yards with no issue?
Yeah. So from a strategy perspective, that's certainly we feel very comfortable in that. We've had some scale in the past and know how to do it. And the challenges, which I fully enjoy, are growth challenges, and that's really finding the right strategic partner to scale. And for us, it's just getting more shots on goal and speaking to potential investors and what their called problems are, and if we can solve or provide solutions to them. And so the more reps that we get and capabilities that we can show that we have the track, we have the risk management, and we have the experience. It's just going to be call it beneficial for us, and we're excited about that. I mean, the consolidation conversations that we have are super interesting because there's just so many good players out there looking to scale, and we're just looking for as always ways to align and
with the right partners.
Yeah, with the right partners. Yeah.
So does Hunting Hill have a set of assets that you guys do not sort of play with assets that do not fall into that set? Effectively, do you offer yield on any kind of asset within the digital asset space, or is it just the blue chips?
Oh yeah, I see what you're saying. Yeah. So we given the index active index that we run, we're in the top 25, and we frankly traffic in the top 4, call it 4 to 5, probably 90% of the allocations there.
Yeah.
And that's largely just due to volumes and opportunity set that we're in. And That
So
said,
the liquidity in general, where it just might not be deep enough for.
that's right. Yeah. That said, we still do have strategies that traffic in DeFi and that kind of goes down the risk curve, so to speak.
So you
with
guys
yield.
do touch DeFi.
Yeah, we have a strategy that will have a small allocation into DeFi. Again, the way that we're only able to do that isn't from a qualified custodian perspective. So, we can get on exchange by posting our assets at a qualified custodian and then have the exchange mirror it. Same thing in DeFi. So yeah, the access points are either on platforms that allow for us to do it, or we're doing a tri-party agreement with qualified custody. And and so that gets us further down the risk curve, but it's a smaller part of what we do. And yeah, we like to focus on where the liquidity sits, which is in the top 25.
So what are your thoughts on these DATs? Like, is it a bubble? Is it a bad thing? Is it a good thing? If your average Joe that's like randomly finding this video on YouTube right now, where they're on their Robinhood app and they're thinking of maybe buying some stock that is associated with one of these DATs, like, what do you think?
Yeah, so I'm not going to offer
no investment advice, of course. I want to be very clear.
I'll give my disclosure.
Not investment advice.
I hear what you're saying. I mean, I think from a public markets perspective, it is a digital asset treasury or SPAC. That's not a new thing. That's been around for many years.
But why this hype now?
Yeah, I think.
What do you think?
It's providing access to crypto for a investor that has a brokerage account and doesn't have a native wallet or doesn't want to have it on a native wallet. And I think there's an element of
but doesn't every broker already offer access to crypto in some sense? It's 2025, right? So it's like,
it's true.
You go on any of these names, I don't want to mention them, right? But there's like a gazillion of them, and there's probably a buy BTC button somewhere, right?
Yeah,
so
it's true.
Is it a play by the companies, or is it actually meeting some serious demand that is really out there? What is it?
Yeah, I mean, I think that there's still some constraints on, for example, Bitcoin. Bitcoin is just an ecosystem for an investor that wants to generate yield on Bitcoin. Yes, you could buy it on a platform. Can you generate yield? No, you actually pay for it to sit in custody. Typically, it's small, but so for an investor that can generate yield on top, that's, I think, beneficial. That's something that is not currently offered in ETFs, and it's not offered in any format, at least that I'm aware of, on a platform that just buys BTC. There may be
you can stake it.
That's Ethereum you can stake.
Yeah,
proof of stake.
Yeah, but not Bitcoin. I mean, like there's some earn programs out there, right? Like there's something.
So the last cycle there was a lot, like I think a pretty large lesson on earn.
Yes. Here in New York.
Yeah. So I think there's some hesitation, at least from my perspective, to say, you could go ahead and post your coin on a platform and generate yield. I think there's potentially some something to learn from the last cycle there. And having a digital asset treasury that's trading 100% over fair value, that's not great either, I don't think, for a investor that's trying to get access to any specific coin, Bitcoin especially. So I do think there's some challenges around how that plays out, and these will all come down to parity at some point, and they're already starting to get pretty tight. The way that, and we get into the weeds on how these things work, but like they are announced, and if it's through a SPAC or through just a shell company, there can be a price spike, and then the shares come available between 2 months and 4 months later for those that invested through a private transaction, and it comes back down. So that's frankly just how the equity markets function with these things. And there is that sort of spike that would happen. Sometimes it's just short covering, sometimes it's people aggressively buying. Eventually they come back down to parity, and I think that those offerings can be beneficial. So generating yield, there's of course a flywheel effect for when these companies issue more shares to buy more coin, and that can also be beneficial for shareholders, which wouldn't be the case if you just bought Bitcoin. So there is almost like a levered play inside of digital asset treasury companies for a specific coin. There can be yield that generates. So those are the positives. I think, the challenges are if these things are trading at massive premiums and people are buying in thinking they're going to continue to go up when they will eventually come back down.
Well, as an asset manager, obviously you care a lot about capital efficiency, right? You're moving flow. You've got some capital somewhere that might be sitting around for maybe not too long, but like yield matters a lot, right?
Yeah.
Whether it's on the underlying, the actual Bitcoin, or maybe even on stables, right? That you might be using. So like, how do you manage yield for Hunting Hill as a problem, right? It is a problem statement, right? You want to make sure that everything that you're holding is not just sitting idle and not just, working for you.
Yeah.
So, and I do want to get your thoughts on sort of like this wave of yield bearing stablecoins.
Yeah.
Because I think that's going to be a very interesting sort of part of history as we continue.
Yeah. Yeah. I mean, the first question around yield within the strategies we run, we do provide staking yield and other ways to generate yield on our index. So that is what we consider still active because it's not really offered in a passive way. So it is something that we are finely tuning every day and look for new opportunities to generate that yield on top of the index that we run.
Are you dog feeding your strategies as well? Like your own treasuries as Hunting Hill? Do you guys like also put them back into the same strategies that you're running?
Yeah, so the yield within the index stays there. So it is a compounding version of that. And for some of the other, so just taking a step back, we used to run a Bitcoin and Ethereum yield strategy, and this was in 2020 to 2021, and that was got to be pretty decent size. And so we have a long history of doing this, and now it sits really within a market neutral strategy. So there's a lot of cash and carry trades inside of that strategy, looking at perps, looking at futures, other derivatives to generate yield on coin and on fiat. And so it is primarily what we do in those strategies, especially to generate some capital for the investor base that we have. As far as the stable coins are concerned, it's super interesting because a year ago, generating yield on a stable coin in the United States is illegal. I mean, it's just not allowed. And so now there's just so many different ways for market participants to generate yield on fiat and stable that just we didn't see a year ago. So it has moved so quick. Financial innovation has come full circle, I guess, from kind of 4 or 5 years ago when we were looking at these same things and just completely off limits. I just find it I find it interesting that it is taken off so much. It is a practical use case, I think, for what kind of people are looking for. But it's interesting how different it's.
Do you expect like the maturity, I guess, from a market structure perspective, to just continue shifting towards TradFi existing infrastructure rather than like the crypto native early players? Like think, Coinbase buying over there a bit, right?
Yeah.
Obviously, a lot of the flow still exists on the likes of Binance, OKX, and all these different exchanges.
Oh, you're talking about flow, yeah.
Yeah. Do we think like where does that leave, NASDAQ and the New York Stock Exchange, or is the CME down in 5 years from today?
Yeah.
Do they still end up owning the world and like buying these guys, or do we think like the CMEs of tomorrow are going to have a very different
name?
That's
a great question. Yeah, I think that
because you're aware that a lot of these crypto native venues now offer equities, right? Now They now offer, so like that line between crypto only and like traditional markets is kind of like getting completely obliterated.
Yeah, so I get what you're saying. On the offering side, certainly at one place somebody could access both.
Yeah.
Which I think obviously will continue. What I'm curious about is there going to be a winner in crypto native? So is like Deribit and Coinbase of the world going to take over the New York Stock Exchange?
Yeah.
Or is it going to be the other way around? Look, I think that we're starting to see tokenization of different securities already, and there's a question of which one's the tail wagging the dog. Right now, it's pretty obvious that most of the equities that have some kind of security and then a security component rather, and then tokenized, that's leading the way. when will it actually go to the, to kind of the other side where now tokenization is where all the volume is? And if Deribit has all the volume relative to New York Stock Exchange, I think it depends on, again, custody and balance sheet. So if balance sheet is provided in a regulatory compliant way for the largest players in the world to trade crypto native, then it'll get interesting. Right now, that's just not there.
I think not only is that like the only hurdle, but also like the fact that like all these crypto natives are already by default operating on a 24/7 365 schedule.
Yeah. Settlement instant.
Yeah, like even if like the existing TradFi like venues take that decision tomorrow, I don't think it's that easy to just decide like
no,
we are going to be operating similar into that model.
No,
right?
They can't. Yeah, they can't. It would take years.
Yeah,
it would take years. And
so someone's going to buy someone at some point. Right?
Yeah, it's going to cross over.
So who's going to do that?
Buy
That's the question.
It's a great question. You know, it's funny. This is kind of reminds me of the story of when Credit Suisse went under, and Credit Suisse has this beautiful, huge building in I think Gramercy in New York, in Manhattan.
Yeah,
that's right next to Madison Square Park. And the rumors that were going around was that, oh yeah, Coinbase is going to buy that building. And you're like, wow, how wild would that be if Coinbase is in the Credit Suisse building?
Yeah.
And it's kind of the same thing. It's like Coinbase is going to go ahead and buy the New York Stock Exchange, or is it going to go the other way around?
You can imagine like in 20 years from now, like some documentary running on Netflix talking about like, for the longest time, there was like this existing, exchange that was called the NYSE.
Yeah.
And then
it's
like
now a museum.
Yeah. But then the defaults of the world are like, oh, it's Binance. It's like it's Coinbase.
Yeah,
and that's it. That nothing else exists.
Yeah, nothing else exists.
But yeah, it would be very interesting to kind of see that play out. Like who's gonna take over who? Because a world where both of them existing at that scale also sounds very just not probable, to be honest.
Yeah. We're talking like the next 10, 20 years.
Because if everyone is trying to do like this 360 thing, where it's like you log on to this exchange and you can trade anything, anywhere, anytime. And I think that's where the world is heading, right?
Yeah.
Like whatever you want to touch, it should be available on whatever venue you're touching. And I don't think there's going to be a world where like there's, this venue is where you go trade like this, and that venue is where you go trade that, because that's just a very tiring world for everyone. And given where the technology is today, it sounds very improbable unless someone really wants to keep it that way.
It's just hard to see TradFi winning out in that.
Yeah.
In that competition. If it's T-instant settlement that's working seamlessly, there's custody that people get comfortable with on an institutional, scalable, regulatory way. There's balance sheet that's provided. The infrastructure is built for that, and it continues to get built out. It's hard for me to see, even T+2 or T+1 settlement where there's cash movements and fails and all the other challenges that we see operationally.
The T+1 will be just considered ancient at some point. Right?
Yeah, it's already starting to go there. Yeah, it is. All of that seems to obviously point to tokenization and smart contract world of what we're living in right now, just progressing.
Adam, this was incredible. I want to wrap up with just some thoughts on, like, from you on Hunting Hill.
Yeah.
Where are you guys heading the next 12 to 18 months? Where should we expect to see you guys?
Yeah, no, I mean, we're excited. Given all the, like I said, reverse inquiry we're getting on just the current asset management business, what we're offering, and the potential strategic partnerships that we have been speaking with large institutions that have their own scale, their own abilities to get into the space. And the team is in just a prime position to really grow. And so I'm excited about it. I look forward to, where the journey takes us.
Beautiful. Any final remarks you wanted to share?
Well, I just appreciate you having me on. Honestly, it's always good to listen in, and I'm grateful to be here today and spend the time. And thanks for having me.
Thank you for showing up.
Of course.